In this video, traders, we're going to look at when we should not be taking a trend line break. Trend line break, classic trading 101 setup, but when should we not be taking it? Stay tuned. Hey guys, welcome to you. Thank you for joining me. All right, so I am in the CTrader account, CTrader platform, should I say. Well, now they also offer MT4 as well. But here I have AUDJPY, and it could be anything, right? We could have a commodity, we could have a currency pair, stock, anything. And what I want to kind of talk about now is specifically when we're in August. I'm filming this at the end of August, a notoriously quiet time of the market. Yes, we've had coronavirus. Yes, there's always exceptions to the rule which cause volatility. But specifically now, this is a great time to kind of reinforce this point from my own perspective as well. I was running through some of my charts analysis and thinking, okay, this probably needs to be flagged up as a video to help some others out with this and take away from it what you like. So AUDJPY, end of August, I'm filming this, but very, very useful any other time. Now, what we're talking about today is really when we have a trend line. The classical textbook trade is to take a trend line break, right? So if we're going to trend line drawing tools here, and I know there's lots of ambiguity, guys, about drawing trend lines. Some people like to draw them on the edges. Some people like to draw them on right on the very, very tips of the candlestick. Some people like to draw them over the bodies. However it is, doesn't matter. You draw your trend lines as you see fit, and I think I've done a video where I've talked about the pros and cons of both. So I would say, I think most people say that's probably a reasonably accurate trend line. You could argue that maybe it's up here a little bit more, but that's not a bad place for it. And in fact, you'd probably end up looking at that if you're looking at the broader picture. Anyway, regardless of that, regardless of how you draw the trend line, I don't think anyone would argue that it's now broken. So even if we had it here, we could now say that it's broken. And the textbook strategy for this is we have the trend line. As the trend line breaks, so let's just get this, as the trend line breaks through, we're doing something on the short side or coming out of the long side. So we're either selling immediately on the break or we're waiting for a retest. And that's fine. And you know, in a lot of cases, that's a very good, sound trading strategy to use, because the idea is that the uptrend is now broken. We're going to get a deeper unwinding, and we're going to potentially, after maybe some testing of highs, that's why it's good to get a retest, because sometimes, you know, the retest will take it back above the high and roll over, which is a nice situation. But very often it's, okay, end of trend, let's just revisit and look on the short side potentially. Now, there's certain times, and this is a great example why, that is just not the thing to be doing. And you should add it potentially as a kind of filter, if you like, into your trade and say, hey, if we're coming into a slow time historically in the market, i.e. In August, sometimes we get it in the early few weeks of January as well, after Christmas, that kind of stuff. You can go back and have a look for yourself and just see when the volumes have died off and the volatility's died off in the market you're trading. Different types of markets. You know, some commodities like natural gas have a different tendency to, say, some of the currency pairs, but you get the idea. When we're in a situation where it's not so much the supply demand has shifted so violently and a trend line's broken, it's more a case of everyone's just not transacting. And so the trend line break becomes much more meaningless. Whereas normally you'd expect a trend line break to be, right, we've got supply hitting the market now, demand's backed off, we've tipped that balance, now we've got offers coming in, stepping down over the course of multiple days, whatever it may be, buyers backing off, something's changed fundamentally with the market, potentially, you know the score. But now we're almost in a case where the trend line is broken just because there's nobody trading it, and the trend line naturally obviously goes up, and we can see the trend line pushing higher and higher and higher and higher. That's exactly how a trend line works, and we get to a point where buyers just aren't stepping up anymore, and nor are sellers. And so we get this situation here where we're just kind of drifting. You know, we're just drifting along. We've had many days, we've broken the trend line. Now, could this roll over and go to lows? Of course it could. Could it carry on pushing to highs? Who knows? The point is that you add, you know, less significance and weighting to the trend line break when you're in this scenario, and also not necessarily also from a calendar perspective, just from a perspective of look at the way it's broken. You know, we just kind of tickled lower, and yes, I know this example is an unusual example here because we've got, I know, a pretty decent resistance level up there. Let me just change the color of that so we can see it. I've been playing around with different color settings here, guys. Put on a red. You can see the resistance level up here, so there's a potential reason there why we've kind of backed off a bit. But even if we didn't have that, the fact that we've just kind of tickled lower, you end up over trading if you take every single technical signal, like a trend line break, like a resistance break, as a definitive signal, as a definitive reason to get into the trade. It's not, you know, you look at things in a bigger picture and say, is this still pretty bullish? Yeah, it is. It happens to have broken an arbitrary line that you've drawn on, but in the scheme of things, think about who is transacting AUD/JPY, who is buying this currency pair or selling one of the currencies or the other, whichever way you want to look at it. Who is doing it? Are they looking at a trend line? No, they're probably not. They're not really. There's a few speculators out there who may well have that on there, of course. But really, with this underlying market, we're talking institutions, we're talking governments, we're talking companies, we're talking bigger money that's really not interested in this. They're not. Maybe they decide not to hedge at the moment. It's just a contraction of volatility and of participants. And so, looking at the trend line break and getting frustrated that it's not doing what you want, it's not breaking as it normally would, you have to step back and go, right, let me put myself in the shoes of all the other people who are trading this. Is the trend line broke because we've now got a significant shift in supply demand imbalance, which we potentially had here? If you go back and you look at kind of the coronavirus dip, that was a significant change. And okay, trend line's a little bit grubby there, but you get the idea, guys. This was a significant change in sentiment. The sentiment had changed dramatically, and then a huge bid came in. You know, something to look at and potentially trade if that was part of your kind of strategy. But when you see this, just a tickle lower, a little test, it almost to me looks like a 50-50 trade. Yes, the resistance above adds a little bit of weight to that, but if we didn't have this and we just broke this, you could say it quite easily could drift back up, it could quite easily sit there, or it could quite easily stagnate for another month like it's done and just drift sideways, in which case you get frustrated if you're taking the trend line break. So the kind of summary, guys, of this video is to just be aware when you're taking any technical thing, and trend line break is this example, when you're taking any technical type pattern, just take a step back for a moment and think the reason you're taking this pattern and the other participants on the other side of the trade and how they would be perceiving this, and is it significant enough to warrant a complete change in sentiment, because that's effectively what we're saying here. Now, yes, granted, if you were kind of a 3 or 4 day scalp, it might be a trigger from that. But if you're looking for a longer move, like over a couple of weeks, a month or so, there has to be a significant change in something for that to occur. So just something to point out, guys, if you're interested in a new broker or an additional broker, or you just want to see what Seatrade is all about. Take care, guys. Bye-bye.